trying to keep up with crypto, it really can feel like a full-time job, can't it?
Oh, absolutely. It moves incredibly fast.
Yeah, and there's always, some new headline grabbing your attention. That's actually why we do the deep dive. We try to put through all that noise.
Right. Distill it down to what you really need to know.
And hopefully connect the dots for you in a way that makes sense.
Exactly. We've gone through a stack of recent articles, news, research, basically pulling out the key stuff shaping the crypto world right now. The idea is you walk away feeling properly informed without feeling totally overwhelmed.
Okay, so let's get into it. Today, we've got some really interesting ground to cover. We'll look at the Federal Reserve, what they're signaling about interest rates, and, how that might ripple outwards. We've also got a big story about a crypto money laundering bust in Europe. Really highlights some regulatory stuff.
Yeah, that one's significant.
Plus, we'll try to get a sense of the market's mood, where the big money is actually flowing, and even dive into this potentially major debate about changing how we count Bitcoin itself.
Right. Our mission here is pretty straightforward. Give you clarity, give you context, help you understand why these things matter, what the bigger picture might be.
Get the essentials, skip the jargon jungle.
That's the plan.
Okay, let's start big picture then. Macroeconomy. It seems the Fed is still playing things pretty cautiously on interest rates.
Yeah, Federal Reserve official Raphael Bostic was talking about potential rate cuts, but not until 2025. And even then, he was very clear that it all depends on, well, how things unfold, the economic data, basically.
And he specifically called out tariffs, didn't he?
He did. That was interesting. He said the impact of tariffs needs time to become clear, and that's really shaping his view. So for now, he seems to be leaning towards maybe only one rate cut this year.
Okay, and just to connect that for people, higher interest rates generally make riskier investments less attractive, right?
Typically, yes. Higher borrowing costs, maybe less capital available to flow into things perceived as more speculative.
So a cautious Fed, a hawkish stance, as they say, could definitely put a damper on crypto investor appetite.
It certainly could. It's one factor to watch.
Right. Okay, shifting gears now to the regulatory side. This takedown in Europe sounds pretty major. A secret crypto laundering network.
It really does. We're talking over 21 million euros, so roughly 23 million US dollars laundered through this network.
Wow.
And not a small operation either. 17 arrests across Spain, Austria, and Belgium.
Multi-jurisdictional?
Exactly. And highlighting the complexity law enforcement faces. Reports suggest Chinese nationals handling cash collection in Spain, while Arab nationals were managing the international transfers. It points to a really organized setup.
And the assets they seized?
Yeah.
It wasn't just digital currency, wasn't it?
No, far from it. About $230,000 in cash, maybe $205,000 in crypto. But also luxury cars, property, even high-end cigars and handbags.
Seriously, cigars.
Apparently so. The total value seized was over $3.5 million.
It just goes to show, even with blockchain's transparency, people find ways to exploit it for illicit stuff.
Absolutely. And this operation really highlights the ongoing and probably increasing efforts by European law enforcement to coordinate and tackle these kinds of financial crimes involving crypto. It's a constant cat and mouse game.
Yeah. Okay, so moving from regulation to how the market itself is feeling. Sounds like there's a bit of confusion. Or divergence, maybe.
Divergence is a good word for it. We're seeing mixed signals in market sentiment right now.
And one way to measure that is through funding rates on exchanges.
Exactly. Both centralized and decentralized platforms have these. They're basically small fees paid between traders holding long positions, betting the price goes up, and those holding short positions, betting it goes down.
It keeps the contract price close to the actual spot price.
That's the idea. It's a balancing mechanism. If way more people are long, longs pay shorts a small fee, and vice versa. It sort of reflects the immediate demand pressure.
Okay, so what are these rates telling us now? CoinGlass data suggests bearish and neutral outlooks coexisting.
Right. So think of 0.01% as a sort of baseline funding rate. If rates are consistently above that, it usually means bullish sentiment dominates, people are willing to pay to be long.
And below, say, 0.005%.
That typically points towards bearish sentiment shorts might even be getting paid by longs.
So the fact that rates are sort of hovering around, showing this mix.
It reflects uncertainty. No strong conviction in one direction across the market right now. People are maybe a bit hesitant.
But despite that hesitation, maybe in the derivatives market, it looks like actual money, institutional money, is still flowing in.
That's the interesting contrast, isn't it? The latest CoinShares weekly report showed inflows of $785 million just last week.
That's pretty significant.
It is, and it's the 5th week in a row of positive inflows. We saw outflows back in February, March, so this suggests a recovery, maybe a shift in institutional mood.
And year to date, that brings the total to, what was it?
A solid $7.5 billion. So, yeah, those earlier outflows have been more than offset.
Okay, where's this money coming from, geographically?
The U.S. is way out in front, $681 million in inflows just from the U.S.
Wow.
Germany is next with about $86 million, and Hong Kong actually saw its largest weekly inflow since last November, around $24 million.
But not everywhere.
No, some outflows too. Sweden, Canada, Brazil saw money leaving these digital asset products.
Interesting. And what about which assets are getting the money? Still mostly Bitcoin.
Bitcoin got the biggest chunk, yes, $557 million. But interestingly, the pace slowed down a bit compared to the week before.
Okay.
And we saw small inflows into short products, $5.8 million, which again kind of echoes that cautious sentiment, maybe linked to the Fed outlook we talked about.
Right, hedging their bets a little.
Possibly. But the real highlight was Ethereum.
Oh, yeah?
Big inflows there. $205 million seems driven by excitement around the upcoming Pectra upgrade.
Which is about scalability and functionality improvements.
Exactly. And also some recent management changes in the Ethereum world. Year to date, ETH inflows are now $575 million.
And Solana.
Actually saw a small outflow, about $8.9 million. It was the only major ETP product with outflows listed in the report.
So institutional money is coming in, but maybe selectively. And Ethereum's definitely catching their eye right now because of specific developments.
That seems to be the picture, yeah.
Okay, now for something a bit different and slightly worrying. A security issue involving printers.
Yeah, kind of weird, right? Apparently, official printer drivers from a company called ProColored were found to contain a backdoor.
A backdoor in printer software.
Yep. And it's been linked to the theft of at least 9.3 Bitcoins.
Ouch. That's not insignificant. How does that even happen? A backdoor in official drivers?
Well, the initial reports suggest it might have started with an infected USB drive used internally at the company. Somehow that got uploaded to cloud storage, and then the compromised drivers got distributed out to users.
Oh, supply chain vulnerability.
Classic example. It really shows how security risks can pop up in the most unexpected places. Gotta be careful what you install.
Absolutely, even if it looks legit. Okay, let's switch tracks again. This could be a big one for the Bitcoin community. Bitcoin Improvement Proposal 177. What's this all about?
So BIP 177 was put forward by developer John Carvalho. The core idea is to change the fundamental unit of account for Bitcoin. Instead of Satoshis being the smallest unit, it proposes redenominating the 21 million Bitcoins into 21 trillion units.
21 trillion. Whoa. So the idea is to make smaller amounts feel less fractional.
That seems to be the motivation. Jack Dorsey, Block's CEO, tweeted support. He mentioned finding Satoshis confusing for people new to Bitcoin.
But there must be pushback, too.
Oh, definitely. Corey Clipston from Swan Bitcoin is against it. His argument is basically people understand cents in a dollar. They can understand Satoshis in a Bitcoin. It's a familiar concept.
That's a fair point, too. It's like, why fix what isn't broken, maybe?
Well, and there's the history. Satoshi Nakamoto themselves apparently mentioned early on that the display unit could be changed later, but, and this is a big but, the Bitcoin network is notoriously conservative about core changes.
Right. When was the last major upgrade? Taproot.
Taproot, November 2021. So getting consensus for something like this is a huge hurdle. It's not easy.
And are there practical worries, like could it cause confusion or errors?
Yes, that's a major concern. Slomus founder Eugene raised the issue of potential misaccounting. The fear is that some platforms might start calling this new tiny unit BTC, leading people to think they have a full Bitcoin when they actually have a minuscule fraction.
Oh, I can see how that can happen.
Yeah, leading to basic security mistakes, scams targeting newbies. It's a genuine worry about the real-world implementation headaches.
So BIP 177 definitely sounds like it's going to stir up a lot of debate.
For sure. It touches on fundamental aspects of how people interact with Bitcoin.
Okay, let's shift to the business side of crypto and fintech. Revolut's making big moves in France.
They are indeed. They've announced a $1 billion investment that's about $1.1 billion US into France over the next 3 years. And alongside that, they're applying for a French banking license. It's a serious commitment.
€1 billion is significant. What's the strategy there?
Seems to be about deepening their foothold in Western Europe. They're setting up a Paris office to manage operations in the region. They expect to create about 200 new jobs in France on top of the 300 they already have there.
But Lithuania remains important for them too.
Yes, they clarify that Lithuania will still be a major hub for their European operations overall.
And this comes after some good financial news for them, right?
Exactly. They reported doubled profits in 2024, reaching $1.3 billion.
Wow, doubled.
Yeah, driven by user growth and, interestingly, a resurgence in crypto trading on their platform.
Ah, so crypto is still a significant part of their business.
It appears so.
Okay, sticking with exchanges, Binance has some new promotions around Ethereum. What are they offering?
They've launched 2 campaigns under their Simple Earn ETH flexible products, running until mid-June next year.
All right.
Promotion A is about earning USDC rewards, those red packets they do. You need to subscribe at least 0.05 ETH during the promotion. Then you get ranked based on your net daily ETH subscription. So new subscriptions minus any withdrawals.
And the rewards are tiered.
Yeah, top rank that's 3,000 USDC, going down to 30 USDC for ranks 11 through 50. The key is subscribing and holding the ETH to maximize your score.
Got it. So incentivizing deposits and holding. What's promotion B?
That one's focused on the APR, the yield. Eligible users can get up to 3.3% APR on their ETH.
3.3%. How does that break down?
It's 2 parts. A 2% bonus tiered APR paid out daily to your spot wallet, plus roughly 1.3% real-time APR that accrues minute by minute in your Earn account.
Are there limits or minimums?
Minimum subscription is tiny, 0.0002 ETH. No stated maximum, but it's first come, first served, and depends on platform capacity.
Okay, so a mix of potential direct rewards and boosted yield. Looks like Binance is trying to attract and keep ETH holders on their platform.
Seems like a clear play to increase ETH staking and liquidity through their Simple Earn product.
Makes sense. All right, let's check in on regulation again, this time in Dubai. They're updating rules.
Yes. The Dubai Virtual Assets Regulatory Authority, VARI, has revised its rulebook for digital asset trading. The main focus seems to be on strengthening controls around leverage and collateral requirements for margin trading.
So making leverage trading potentially a bit safer, or at least requiring more skin in the game.
That seems to be the goal. They've made specific amendments to the rulebooks for broker-dealers and exchanges. VRI said it's about aligning with international risk standards and applying lessons learned from their licensing process so far.
Taking practical experience into account.
Exactly, and incorporating international best practices. Their chief legal officer basically said it's about reinforcing a responsible and scalable ecosystem.
Dubai has been pretty proactive in trying to set clear rules, hasn't it? Trying to be a hub.
They have. Relatively clear regulations early on definitely helped attract crypto businesses. These updates look like part of an ongoing effort to maintain that status, but perhaps with more guardrails.
Okay, and staying with regulation, but back in the U.S., big news potentially coming from the Senate tonight.
That's right. The U.S. Senate is set to vote tonight on advancing a bill related to stablecoins.
Just advancing it, but still.
Still potentially very significant. Everyone in the crypto market will be watching this closely. It could really shape how stablecoins are regulated in the U.S.
Which could have global ripple effects, given the dollar's role.
Absolutely. A major development to keep an eye on.
Definitely. Okay, let's get a quick pulse check on the market itself. Binance market update.
Sure. As of this morning, UTC time, the global crypto market cap was around $3.31 trillion. That's up about 1.3% over the last day, according to CoinMarketCap.
Okay, slight uptick overall. Bitcoin.
Bitcoin traded in a range between roughly $102,000 and $107,100. As of the update, it was around $103,240, actually down about 0.7% on the day.
So the overall cap is up, but Bitcoin is slightly down. Means altcoins must be doing okay.
Well, actually, the report noted most major cryptocurrencies by market cap were trading lower.
Oh, okay. So maybe smaller caps pulling the average up?
Any big gainers?
On Binance, the top performers listed were Kyoto, Epic, and Alpha, all showing decent percentage gains.
But the majors?
Yeah, ETH down over 4%, XRP down over 3%, BNB down 1%, SOL down over 5%, DOGE down nearly 3%, ADE down almost 5%, TRX, WBTC, Trump, SUI all lower too.
Does it reflect some complex dynamics, maybe profit-taking in majors while some smaller assets see buying?
All right. Now, BlackRock's BUIDL fund. We hear a lot about that. How's it doing?
Doing very well in terms of attracting assets. As of May 18th, it reached about $2.88 billion.
Nearly $3 billion. That's substantial. Where is that money invested?
This is the really striking part. Over 95% of it, about $2.68 billion, is in Ethereum ecosystem assets.
95% in Ethereum.
Yep. They have tiny holdings in Aptos and Avalanche too, but it's overwhelmingly Ethereum. It really highlights Ethereum's dominance right now in the RWA space, real-world assets.
Tokenizing things like bonds, real estate on the blockchain.
Exactly. And BlackRock's fund seems heavily focused on doing that within the Ethereum ecosystem.
That's a strong signal of institutional confidence in Ethereum for that specific use case.
It certainly looks that way.
Okay, what about Bitcoin's relationship with gold? We often hear it compared. Any updates on the correlation?
Yeah, Glassnode put out some data showing a shift in the short term. The 30-day correlation between Bitcoin and gold actually dropped quite a bit, down to negative 0.54.
Negative 0.54. So moving in opposite directions recently.
In the very short term, yes. That's the lowest that 30-day correlation has been since February.
But what about longer term?
Still positive. The 90-day correlation is 0.39, and the 365-day is 0.60.
So longer picture, they still tend to move somewhat together, but short-term noise is pulling them apart right now.
That seems to be what the data suggests. Short-term divergence, longer-term positive correlation remains.
Interesting. Okay, we talked Dubai, U.S., back to Europe, specifically Germany. A big licensing development there.
Yes, BaFin, the German financial regulator, granted a full MiCA license to Trade Republic.
Trade Republic, the fintech platform, that sounds significant. What does MiCA allow them to do?
MiCA is the EU's big new crypto regulation framework, right? So this license is comprehensive. It lets Trade Republic offer crypto custody.
Holding crypto for customers.
Exactly. Plus executing and transmitting orders, transfer services, basically the full suite of crypto activities for their 4 million customers across 17 markets.
Wow, 4 million customers. That's a big deal for crypto adoption in Europe.
It really is. And it positions Trade Republic as a major regulated player.
And Germany seems to be leading the charge on MiCA implementation.
They definitely seem to be out front. They've now granted 9 MiCA licenses, which is apparently over a third of all the initial licenses issued across the EU so far.
And there's a deadline looming, right? Mid-2025.
Yeah, that's when unlicensed crypto firms might lose their ability to operate easily across the EU. So you're seeing firms rushing to get these applications in and approved. Germany seems to be processing them efficiently.
Okay, so regulatory clarity slowly solidifying in Europe. Now let's look at some specific token movements. Look on Chain spotted some big transfers.
Yeah, they flagged movements of BLUR and LDO tokens by what looks like a single large holder, maybe an institution or whale. Over the past week, this entity moved 34.2 million BLUR tokens, worth about $4 million, onto exchanges.
Moving to exchanges often signals intent to sell, though not always. Do they still hold a lot?
They do. They still have about $8 million worth of LDO and another $4.5 million in BLUR. But they've been moving LDO too. Just before this BLUR report, they sent $3.1 million in LDO to an exchange.
And the total LDO moved recently.
Over the last 6 days or so, that entity has moved over $21 million worth of LDO onto centralized exchanges.
21 million. That definitely gets the market talking. What are they planning?
Exactly. Big moves like that always fuel speculation about strategy and potential price impact.
Right. Now, switching to stablecoins again, Tether's still growing its reserves.
Apparently so. Tether CEO Paolo Ardoino announced something quite interesting. He said Tether's holdings of U.S. Treasuries now exceed the amount held by the entire country of Germany.
Wow. Tether holds more U.S. debt than Germany.
According to Ardoino, yes. And he added their next target is to surpass South Korea's holdings.
That's astonishing, really. For a private company issuing stablecoins, it speaks volumes about the scale of USDT adoption.
It really does. The sheer volume of capital flowing through and backing that stablecoin is immense.
Okay, finally, let's get a traditional finance perspective on that U.S. credit rating downgrade we mentioned earlier.
Mansoor Mohiuddin, chief economist at Bank of Singapore, offered some analysis. He sees 3 main potential impacts.
Okay, what are they?
First, the worsening U.S. fiscal situation, which contributed to the downgrade, supports the view that long-term Treasury yields will likely keep rising. Their bank forecasts the 10-year yield hitting 5% within a year.
Higher borrowing costs for the U.S. government.
Right. Second, he thinks the downgrade threatens the safe haven status of Treasuries, which reinforces their view that the U.S. dollar might have already peaked.
Interesting. So potentially a weaker dollar long term.
That's their take. And third, the big deficits and inflation might force the Fed to keep interest rates higher for longer than people might expect.
So the downgrade isn't just symbolic. It could have real effects on yields, the dollar, and Fed policy.
That's the argument. A reminder that traditional finance and crypto markets are definitely interconnected.
Good point. And just one last quick indicator. The CMC Altcoin Season Index. Where's that sitting?
Currently at 24, according to CoinMarketCap.
24, which is pretty low, right? What does that mean again?
It basically measures how well the top altcoins are doing compared to Bitcoin.
Uh,
A low score, like 24, suggests it's very much not altcoin season. Bitcoin is dominating market performance right now.
okay. Provides a quick snapshot of that dynamic.
Exactly. Bitcoin dominance is strong when that index is low.
Wow. Okay, that was quite the journey. We've covered a lot: regulations from Europe to Dubai to the U.S., market sentiment indicators pointing different ways, big institutional money flows, company expansion, security scares, and even that fundamental debate about Bitcoin units.
It really shows how multifaceted the space is. And like we said, even when it seems chaotic, if you look closely, you can see these important signals and patterns emerging.
So here's maybe a final thought to leave you with. We saw strong institutional inflows, particularly into things like Ethereum and Bitcoin investment products.
Right, big money coming in.
But at the same time, we saw cautious, even bearish signals in derivatives, funding rates, and maybe some profit-taking in major coins today. So what does that contrast tell us about market confidence right now? Is it like long-term conviction from institutions while short-term traders are nervous? Or is there just a general undercurrent of uncertainty that's affecting everyone differently?
That's a great question to ponder. Is it strategic accumulation meeting short-term jitters?
Definitely something to think about as you digest all this.
And we absolutely encourage you to reflect on these developments, maybe dig deeper into the topics that sparked your interest. This space never stops moving.
Staying informed and thinking critically is really the key.
Couldn't agree more.
All right, that wraps up this deep dive. Thanks so much for joining us as we navigated through the latest in crypto.
Until next time.
Keep learning, stay curious, and we'll catch you on the next one.